Welcome to ShortView Trading, it's your morning market hit for Tuesday, August the 31st. What matters today and this week for traders? Well, Jerome Powell certainly delivered on Friday at his key Jackson Hole speech, giving really super dovish speech. Dovish on the timing of tapering, dovish on the association of tapering and rates pushing back the rate hikes even further, and dovish on the idea of financial stability. In other words, it didn't even get a mention like it did from the Korean central bank last week when they hiked rates, discussing their concerns about indebtedness levels. And as you can see in the chart in front of you now, the Fed funds futures, if you look at a deck 23, deck 24 and 25, priced out a basis point or two of rate hikes on the back of that speech on Friday. Added to that, of course, equities moving higher, particularly in the US, S&P 500, NASDAQ 100, both making record new highs on the back of Powell's dovishness on Friday. Those two, of course, helped very much by a weak dollar. And as you can see in the chart in front of you now, the euro's found a nice support level around 116 and change, been bouncing off that over the last few days, propelled a little bit more by the fact that Powell gave such a dovish speech, undermining the dollar strength and leading to a bit of a broad-based DXY weakness and dollar weakness against the euro. Reflecting that, naturally, European equities struggled to be as impressive as we saw in the States, edging higher but not making new record highs. So the key question now is, what kind of market environment are we in for US equities? Was the mid-August wobble simply a one and done pullback, much as we've seen over the course of recent months? In fact, as you can see in the chart in front of you now, mid-June, mid-July, and even further back, you get a one-wave wobble and then a resumption of the uptrend after a sharp bounce and then a move into a grind higher. So the key question is, are we in that grind higher phase now? Or should we be more concerned about the message of some of the models? Indeed, there's a clear emerging sell message from some of the key models, as for example, we're showing you now the technical scoring system back on sell once again. A little bit troubling in that respect, but it's not necessarily an across the board message. So for us, this is now the key question, getting that market environment right, and therefore, how should you use the models in terms of your 1 to 2 week trading recommendations? So to see how we're playing this and how we're assessing this market environment, please see today's Daily Rag available to subscribers via the website. Or if you're interested in knowing more, please click on the link below and sign up for a 7-day free trial. Simply enter your name and email address, no credit card details required, and we'll send you the Daily Rag for free for 7 trading sessions. So what are we watching today and this week? Well, today there's plenty going on. In particular, there's some CPI data out of the Eurozone, key Eurozone countries, with some estimates of their latest CPI updates. But added to that, it's the big data week for the US. It's the first week of the month in the back end of this week. So we get ISM manufacturing later on this week, and of course, ADP employment. And then the big one, the non-farm payrolls on Friday, which will be watched super closely to see whether we can deliver another big number in terms of new monthly payrolls as we did last month. So that's it from us. That's your morning market hit for Tuesday, August the 31st. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading and click on the subscribe button, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.